Welcome to the weekly swing low. It's March 22nd, 2025, and we're going to cover our normal tickers. It's been a week of consolidation, prices being indecisive, but it does look like we're still in weekly cycle decline. Let's talk about the levels you should know about. We'll start with SPY. So looking at the daily chart, in our last update, we talked about how we were making a swing low. That was Friday. And so we made a swing low by closing above 557.43. And on Monday, we actually got follow through. So we made a nice higher high. This is exactly what follow through looks like, right? The swing happened above this high here. So we closed above it and then we got follow through. But then what happened Tuesday? We had a down day. We actually made a lower low and we closed as a lower low. So that didn't look good. But then the next day, Wednesday, we reversed. And of course, that was FOMC day. But look at this pretty harsh upper wick. And then the following day, we had another rally that was reversed again. You have this upper wick. And then finally, Friday, we made another lower low, sweeped these lows here, did not break this low. That's really important. Let's set a line there. Did not break that low, came close to testing it, and then we shot back up. So it's day 6 of a new daily cycle, and we are kind of wasting time here. We're consolidating, we're churning. We made a high back on day 4. So it is entirely possible that that is going to become our daily cycle high. And just technically speaking, this candle from Wednesday is the high, the day of the Fed meeting. We had that spike up. The low of that candle is 559.95. So call it 560. So if we close below 560, that makes this candle, the Wednesday candle, March 19th, a daily swing high and potentially your daily cycle high after only a 4-day rally. That would be the really bearish scenario. Of course, this consolidation is taking the form of a bull flag, right? Like look at how this consolidation is holding this low here off of this rally. So this could also break to the upside. You have to be ready for both scenarios. So 560 is your move to the downside. And we talked about how this was during last week's update. We needed to get back above this high. So that's 567.83. And notice we got close to that and we retreated basically 3 different times, right? On Tuesday, then again on Wednesday, then again on Thursday. And so that becomes your line in the sand. If we can close above 567.83, right? Like let's just draw that out, right? Let's say we get that close like right there, right? Imagine we could work our way back up to all-time highs, and that's 7.5%. And of course, that means for individual stocks will go up way more than that. So all that to say, you can wait for confirmation. There's really nothing to do here. And if we look at the weekly, we'll give a better sense. Like the weekly chart, we're on week 9. It appears that we're still in weekly cycle decline. That said, if next week can close above 569.24, the high of this week, which made a little higher high versus last week, then we now have a swing low on the weekly chart. This becomes a swing low, and absolutely possible that this could be a longer term weekly low, a false breakdown of this. That is not my base case though, and that level is very clear, 569.24. Again, notice we did make a higher high on the weekly. We just weren't able to hold it. We got that big pullback. That was, this high was on Wednesday, that Fed day. So those are your levels, very clear. Not much to do here. We're just in a range, as I said. Let's look at the other charts. They're going to be in a very similar place. Obviously, the levels will be different, so we'll talk about that. So for the Qs, same kind of idea, right? Friday, we had our swing low, then we had follow through, and now we're consolidating. The Qs are in a little bit of a weaker position because we're actually consolidating inside the range of the Friday candle. I'll flip back to SPY real quick. You see the difference? This is the Friday candle for SPY. We're consolidating at the upper end of that range, whereas the Qs, we're basically inside the range. We almost even broke that low. Like, let's mark that. Did we break it? Oh, we actually touched it. Yeah. So that low is 473. And yeah, we got down just below 473 on Friday, but then kind of bounced back up. So that 473 level becomes a really important line in the sand to the downside. And similarly to the upside, right? Like we've got to break above this cluster of highs. So call it 586, or excuse me, 486. And on the weekly chart, the Qs are most likely going to open as an inside week based on the shape of this weekly candle, the way we close. So, imagine we open something like this. And then it's a question of which side of this range are we going to break, right? Because we're going to be inside that range. I'll just draw these lines so that's clear, right? So I'll delete this, right? So like price is going to open inside this range. So a high of 485.84 and a low of 472.41. Obviously, we could have a huge gap up or gap down, given the headline-driven market we have. But our expectation would be an inside week opening, and then we see is price gravitating to the higher end, or is it gravitating to the lower end? Those are your lines in the sand. And of course, there's the backdrop of all of this. We have the March candle closing, and for the Qs, a swing high is active below 496.93, so call it 497. And for SPY, the monthly swing high is active below 580.69. So we're still quite a bit, there's still quite a bit of distance between where we are now and where we need to be to get back above that monthly swing high. So this is looking bearish for the long term until we can see a more positive signal, the first stop would be a weekly swing low. So for the Qs, that weekly swing low level would be a move above 485.84. So again, that 486 area. What about the ratio of QQQ to SPY? So that is trying to bottom, right? Like we have this big down red candle, and now all the price action has been inside the range. We want to watch this. When this thing starts accelerating to the upside, that should coincide with a broader market rally. What about the Dow? So the Dow looks stronger. So the Dow is starting to outperform SPY. Look at this. This is definitely, so this is your swing low candle. This is your follow through, and then this is your consolidation. But that consolidation is happening. We were able to make even higher highs. So now you really need to move back above 420, call it, right? A close above 420 on a daily level is a very positive signal. Same count, it's day 6. And for the Dow, we talked about this in the last update. The Dow actually peaked back in, what was it? Was it December? Yes. Yeah, so the Dow peaked, actually it peaked back in January. And so we're actually already above the swing high. So for the Dow, there was a monthly swing high active below 417 essentially. And so we're actually back above that. Want to watch that level like bull bear, especially as we have the March candle closed. And of course, if we look at the ratio, as we said, it's starting, look at that. We just made a little higher low, swing low after this higher low, swing low, higher than this. That's not a great sign. When the Dow is outperforming SPY, it usually means the market is in correction, because it just means SPY, like it usually means that they're both going down, but the Dow is going down at a slower rate. What about IWM? Same picture for IWM. For IWM, that low that we want to watch is 201.76, and we really need to get back above 207.68, call it. And we would like for IWM, we're going to open as an inside week. Those levels, the high is that 207.68 level, and the low is at 201.76. So we're going to want to see which side of the range does price want to break down. And also notice we have this giant range for the QQQ. We just flushed right below the bottom of that range. That's actually kind of bullish. I put that in the bullish kind of column. And for the Qs, the monthly candle for the Qs actually topped out back in November. And that swing high is active below 216.71. So that becomes a very important level to get back above, so that we're not below this gigantic swing high from back. Because the implication is that this was your longer term cycle top off of this rally, which actually kind of undercut this low. Not great stuff. So that's IWM. And what about the ratio? How is that looking? Ooh, the ratio just printed a big swing high. So notice this candle makes a high. We then get consolidation the next day, and then wham, a close below. Let's see if we get some follow through on Monday, right? Something like this, which is what you would get if the market continued lower, especially if it's going to turn down. If this is gonna be a left translated daily cycle. What about SMH? So SMH again, all the same count. It's so actually no, this one actually as I say that, I thought this one might have bottomed sooner. So day 8. So it's day 8 for SMH. For SMH, our high came on day 4, and the low of that day is 226. So we are right now. There is a daily swing high active. All right, so that's really important. So really important level here. SMH has to get back above 226 to get. So it has to get back above 226 so that we still have this possibility, right? Because what we're hoping for is that this is just a little retracement here, and then we get something like this, right? So we've got to break back above, again, that 226 level so to invalidate the daily swing high. And on the weekly, we had a nice little hammer candle, but didn't get follow through. Instead, we got a doji, which means we're going to have a nice inside week as an opening. And then we're going to see which side of the range do we break. It's that same level. It's the same levels, right? 231 to the upside and 221.41 to the downside. So a pretty big range, but it should be clear which side of the range price is starting to gravitate towards as we open Monday. So that's SMH. And keep in mind, SMH, that high was back in July, and the swing high is active below 227.32. So around that 226, 227 level, very important level that needs to be breached to invalidate this monthly swing high. Because again, the implication here is that this long rally was over as of July, really, and then it's just been consolidating, and you would expect that eventually this consolidation breaks down. Now, entirely possible that instead of breaking down, we break up, which again would give you which would suggest that this is just a resting point, right? Like that this isn't your larger cycle top, that we're going to get one later down the road. Again, like the way to visualize that, you have this little retracement that is not a big deal, and then this just becomes a little retracement that's not a big deal, and we get that higher high. That's the big picture signal we're watching for. So that's SMH. And what about the ratio? So the ratio is also below a swing high, but it's trying to bottom. So you could see, what we want to see, what the bulls want to see is a nice little swing low. So a nice little follow through candle on Monday, leaving this as a swing low, a little higher low versus this. So definitely potential here. That's SMH, the ratio, I should say. Now let's move on to Dixie, and let's round out these tickers. So Dixie quietly printed a little swing low and is now making higher highs. You want to needs to stay above 103.76. That's the low from this candle. But you notice this line here, we really need to get back above 104.25. And that level shows up on the weekly chart. Because if we get above that level, right, like imagine a candle like this next week, all of a sudden we've made a higher high on the weekly chart. The catch is we're still inside the gigantic range of this really ugly, big, bearish red candle. So we really need to get all the way back to the top of this range, 107.56. Obviously, there would be trading opportunities in between, but everything inside here is really just price discovery at this point. And in terms of the count on the cycle, very possible that this was our weekly cycle low. The catch is, just because we have a weekly cycle low doesn't mean we have to have a long rally. It could end up being a very shallow rally. So that's week 25. So very possible that we've got our weekly cycle low here on week 25. And if we look at the US 10-year, that one looks like it made a low on week 24, and we've been consolidating since. So it's 2 weeks the last 2 weeks we've been in the same range. And next week, we're going to open as an inside candle, most likely, inside this range that has a high at 4.34 and a low at 4.17. So those are your levels. It's very clear. Can get a close above 4.34. We probably have our weekly cycle low back a couple weeks ago, and this thing could rally for a bit. Conversely, close below 4.17 would tell you potentially the weekly cycle is still declining, or even more bearish, we actually made a weekly cycle low, but we're now starting the decline already, that the rally is over. And of course, there's a world where we make another higher high, trap long, trap folks, and then go lower, which is what you actually might expect given the way price action tends to play out. So that is the US 10-year. What about oil? So oil, we talked about sloshing around in an ugly range. We've been giving quick updates on this over the weeks, and we talked about how we're probably heading down to the lower end of the range. That's exactly what we did. And we've put in 3 weeks of wicks below the range. That is a recipe for a rally, and this is a little bullish hammer. Next week, you want to see this. We want to see price stay above 68.61. If price can stay above 68.61, we probably could test like 70.5, which was the high from this candle. And that's where you would expect to have a little bit of trouble. Look at how that coincides with these several weeks where price couldn't get above here. I know it's a tad higher, but think about that price. Think about that as a larger kind of range. What about TLT? Moving inverse to yields as it does. The weekly cycle is an important one to notice. We have this bearish candle on week 7, but since then it's just been consolidation, and we're going to get more of that next week, at least to start, based on this candle being a doji. So this previous week's candle, the high at 92.24, the low at 90.12. Got to get outside of that range for anything exciting to happen. And it is also week 10. It'll be week 10 next week. So this could absolutely be setting up a bull flag, but right now it's indecision, just like the broader markets. What about TBT? So opposite direction. In this case, we're also consolidating, but closer to the lower end of the range. So for TBT, the weekly candle range is $34.10 at the high and $33.53 at the low. Those are really the only 2 levels that matter at this point. Which way does price break? All right, we're going to look at crypto and then close out with gold and precious metals. So Bitcoin, it's holding this low here. It's been kind of ugly. We're wasting a lot of time, and this maybe it's starting to sound familiar. We're getting these, prices across markets are holding a swing low, but not making a ton of progress. For Bitcoin, we had this big up candle on Wednesday. That was the Fed meeting day. And since then, not much has happened. The range for that candle is a high at 87,000, more or less, and a low at 82,500. Those are your levels. It's really quite that simple. What does price do within that range? We're right now closer to the lower end of it. If you want to be really tactical, we have this daily candle from yesterday, from Friday, where we're just inside so the really tactical entry here would be a break of this range. So that is a high of 84,800 and a low of 83,100. So actually not a pretty not a huge range, especially for something like Bitcoin that can really move. And so you break above 84,800, you could probably see yourself making a trip up to that 87,000 area. So actually not a terrible risk reward. And longer term, close above 85,300, and we are in business in terms of this being a potential weekly cycle low. And you have to imagine the markets in Bitcoin probably still have some level of correlation. So you want to watch the two. One could drag down the other, but that's your level. 85,300 gets you a weekly swing low. And that potentially means all of this price action is coming to an end and we can start to rally again. No guarantees, but that's what we're watching for. Let's look at ETH. So ETH, similar situation for ETH. Weekly candle needs to close above 2152 to leave this behind as a weekly swing low. And on the daily, we have, just really tactically speaking, price has to stay above 1936. All right, let's move on to gold and precious metals. So gold just continues to rally, although it's starting to pause here. So I believe this is week 11 actually. Um, yeah, so starting to get a little late in the weekly cycle. Okay, yeah, so week 11, so not super early in the weekly cycle. And in terms of daily price action, it is day 15. And be aware that if price stays below, and this is a spot price, below 3,026, give or take, that remains a swing high on the daily. So a break above that is actually tradable. And silver doing a similar thing. Silver a little bit more aggressive, also a swing high. For silver, that swing high is below 33.76. And again, similar situation, weekly cycle on week 11. And GDX we'll do GDX and then finally natural gas. So GDX, nice little wick here. So really, so your risk point is you could put your stop below 43.80, something like that. That's your low here. But this is actually kind of a bullish setup, right? Like this definitely creates the possibility that we're doing something like this. And on the weekly, same idea, week 11. Um, you want to watch if this thing closes next week below 43.77, that is a weekly swing high. So you want to watch that if if price continues kind of lower and we don't get the rebound we don't get a rebound off of this. We don't get continuation. And finally, we'll do natural gas. So natural gas, putting in a weekly swing high below 401. And on the daily, yikes. That is your, So your daily swing high, and I think we talked about this in the last update, daily swing high below 453. We're now seeing another swing high down here. So a lower high than this. Not a great sign, but that gives you your line in the sand that you need to cross above before you can even think about being bullish. And that's all the tickers. That's your update for today. Thanks for watching.